Hello and welcome to this short trading strategy video where I'll be covering Ichimoku Clouds. This is the second of 3 videos that focuses on trend trading, and hopefully you found the first one on moving averages and Heikin-Ashi helpful. The full name for Ichimoku Clouds roughly translates as one glance equilibrium chart, and the beauty of this technique is that when you put a cloud on any chart you can very quickly and easily identify the prevailing trend. Now Ichimoku Clouds are popular amongst some traders because they take a lot of the subjectivity out of it. For instance, rather than deciding on the periods used for moving averages, or whether you want simple or exponential, and whether that's a 10, 50 or 200 period MA, the Ichimoku Cloud is set on defaults, and these defaults can be changed, but those are usually the ones that are used. So if we see now, just put on an Ichimoku Cloud, these are the default settings, and you can see these, which I'll talk about in a little bit more detail. So first off, we'll just apply the chart there, and you can see very quickly it's quite easy to identify the trend. Simply put, when the market is below the cloud, that's indicative of a downtrend. When it's above the cloud, that's indicative of an uptrend. Now there is more to this, which I'll come onto in a moment, but that's the very basic and simplest way to use Ichimoku Clouds. Now if you look in depth at Ichimoku Clouds, there are 4 main parts to look for. The Tenkan Sen, the Kijun Sen, and also the Chiku span, as well as the cloud itself, which I was saying there. Now these names are obviously all in Japanese, and if you're like me and you can't speak Japanese, don't let that put you off. You could just call them the signal for Tenkan Sen, confirming or confirmation for Kijun Sen, and then lagging for Chiku span. So first off, as I was saying, the main thing you look for is if the market is above or below the cloud. You can see here we're clearly above the cloud, that's a positive. And then you look at each of these lines and see where they are relative to the cloud. Now you can see Tenkan Sen, Kijun Sen and Chiku span all well above the cloud. So this is clearly confirmed uptrend according to the Ichimoku Cloud. But obviously if you wait until you have this full confirmation, you'd have missed your entry at some point. So if we just put this down for a moment, you can see where this is most interesting and where the risk reward is most rewarding if you enter at this time is where you get crosses through the cloud. So you can see as we broke above the cloud here, this big green candle, price had pushed up through the cloud, but all the lines accompanying it had been behind. So you can see the leading line there, the confirmation line, and also the lagging line. This lagging line is 26 periods behind. So you can see at the present it's 26 periods behind, but don't be confused when you look back in time. You need to look back for where the lagging line was at that point. You can see that was still below the cloud. Now the Tenkan Sen, as this price move develops above the cloud, you can see the Tenkan Sen is the first to join and break above the cloud, the signal line, and then you get further support when you get this confirming or confirmation line above the cloud. You can see at this point in time you'd have had the Tenkan Sen and the Kijun Sen above, but the lagging line would have still been below the cloud. And it's not actually until price develops for quite a bit along here that you see the lagging line break up above the cloud. You can count back 26 periods to test this, and at that point you have the confirmed break higher, and that's indicative of an uptrend. Now obviously it doesn't work just for uptrends, it works exactly the same for downtrends. You can see as we break below the cloud back here, after several candles we got the signal line falling below, confirming line, a little bit longer afterwards because we had this period of horizontal trade for the confirming line, and then last but not least the lagging line. Now that's an important one to keep an eye on. Now if we change asset class and change market and go to the D30, this is on a daily time frame, you can see what we've got here is a possible cloud break developing. You can see the price has broke above the cloud, so that's one suggestion that the market trend has turned higher, and we've also got the leading and the confirming line above here, but what's not happened yet is this lagging line has not moved above the cloud. So you need this lagging line to come above the cloud to confirm the trend has turned higher. Now this can happen either one of 2 ways. Price can get above where the top of the cloud is now, so let's say somewhere around 11,720. Price gets above there, then obviously the lagging line would come above. Or if, like in gold, if we just hang around this time and this area for let's say 10-15 periods, you'd see this lagging line would move along until it would actually come out of the cloud that way. So those are the 2 things to look for when you're using this. We've got a similar situation with the dollar yen, again on a daily. You can see prices above the cloud. We've got both these 2 lines above the cloud, but the lagging line, as is very often the case, is yet to confirm this move. You can see here this cloud setup isn't so nice for entering a long position because you need a significant move higher to get confirmation on this lagging line. But if we do hang around this level, as you've got with the D30, then you'd see price would come out through the side here. Turning to New Zealand dollar CAD, you can see we had breakdown below. Here we've got an interesting situation where we have these two lines below the cloud, but price is back in the cloud and the lagging lines in the cloud. So this is potentially forming into a bearish trend, but as of yet, it's not yet confirmed. Finally, I just want to talk about the US dollar CAD and touch on what we'll be talking about in the final video here and how you can use multiple time frame analysis. You can see dollar CAD here, we have price breaking down below the cloud. The leading line and the signal line are both below the cloud, but if you look back, the lagging line, it's a bit hard to make out, it's just there, I believe, still just in the cloud. So it's almost confirmed, but not quite confirmed that the trend has turned lower. But if you were to take a trade here, the problem with entering at this point in time is you need a relatively wide stop loss if you choose the stop loss off the cloud. So for instance, if you go short at 132.60, you need a stop loss somewhere up here around the 134 region, some 140 pips away, which is probably too wide for a lot of traders. So what you can do is use shorter time frames, such as an hourly here, and you can see what we've got developing on an hourly is we've had a shorter term time break lower, and you can see the market is down below here. We've got this confirmation from the lagging line here, and if people were to enter short at this point in time, you could have a much tighter stop loss around 132.85, 132.90. So I hope you found that helpful. Please check out our third and final video where I'll go in more depth on multiple time frame analysis.